Hi, everyone. I'm Joyce, a financial advisor at Saturn Advice. Also with me today, we have Shahrukh Abdali, who is also a financial advisor and a CFA charter holder, which is one of the highest distinction when it comes to financial services. Welcome, Shahrukh.
Hello, Joyce. Hello, everyone. Happy to be here.
Thanks for being here today. Today, Shahrukh and I are going to talk about investment committee. Now, for a wealth management business like us, there are two things we specialize in. First is to give sound advice. Second is to make good investment decisions. For the later, investment committee is the centerpiece of that. Shahrukh sits on the investment committee. Could you tell us who else is on the committee?
Thanks, Joyce. I have prepared some slides that I'll use to help me explain that. So, can you see that?
Yes.
Fantastic. So, what you can see here is the Saturn Advice Investment Committee. The structure includes Craig Stobo, the chairman at the top. He's a very experienced and prominent figure in the business community as well as financial services industry. The committee members include myself, Gene Strock, who's also a financial advisor, Peter Dine, the general manager of Saturn Advice, and then Ravi Chandola, who's the business analyst. The committee is provided research and information in-house by Byung-Guk Ken, who's a CFA charter holder as well, and he's the investment analyst and the secretary as well. And then we've got external third-party research provider, My Fiduciary, and Chris Douglas, who's a principal at My Fiduciary, also participates in the committee meetings, and he provides specialized research on fund managers in the industry. So it's a very experienced and vastly skilled committee, and I think we managed to take some really good decisions.
Fantastic. It's a team with great caliber. So, Shahrukh, could you tell us why is it important to have an investment committee, and what does a committee meeting actually entail?
Great question. So what I'll first address is the why. So for any investment management decision, investment management business, it is quite important to make sure that the decisions are backed by solid research and a lot of analysis, just to ensure that we are not making a mistake, we're not choosing, lemons. So that process, that due diligence process at Saturn Advice, is overseen by the investment committee. So it is quite a good way to ensure that in a systematic manner we are choosing the right investment and the best in class assets for our clients. Now, how do we do that? So let's go on to the next slide. So the investment committee meets once a quarter, at least. I say at least because we have the ability to meet in between quarters if there are extraordinary financial circumstances at the financial markets, and or if there are any decisions that require to be taken in between quarters. The first step that we do at any typical committee meeting is to do an attribution analysis of the performance of the approved assets. Now, what are approved assets? Those are the assets which have gone through the due diligence from the investment committee over time. And I'll explain that a little bit more, how that happens. Research is provided in-house as well as from My Fiduciary. The committee members typically would question the outperformance as well as underperformance of the approved assets. Underperformance is very critical. We need to understand what is the reasoning behind a fund manager's underperformance relative to benchmark and the ability of that fund manager to bounce back, or do we need to find a replacement? So we look at that. But we also look at any extraordinary outperformance just to ensure that the fund manager isn't really deviating from the mandate, as in taking a lot more risk than they should be taking, because that's not a sustainable strategy that can create a lot of volatility down the road. We review typically the short-term performance as well as the 3-year, 5-year performances. We look at different types of themes and trends, like what's happening in the technology sector, what's happening in the geographic region. Do we need to look at the emerging markets a bit more, and value investing versus growth style investing? How do we need to tweak any asset allocation? Those kind of decisions are looked upon. Sometimes we have fund managers attend the meeting because they would be providing us an update. So they could be from the approved asset list, or there could be a fund manager out in the universe that we would want to explore a bit further to see if they have something different to offer, or they can complement the existing mix or replace one of the approved assets that we have already in house. The decisions typically would include removing or adding to the approved list, but I have to emphasize that those kind of decisions aren't really happening every quarter. We typically avoid creating a churn of assets. If something is added to the approved asset list, it is based on a lot of research and it's for the longer term view. So we would hope that it would turn out to be a really good decision over the longer term. But that said, we are pretty nimble on our feet. If something doesn't make sense, it can go out pretty quickly. We also try to negotiate discounts on fund manager fees on behalf of our clients, and any discounts that we would typically get passed on to the clients. We do not keep anything for ourselves. So it's a very clean structure at Saturn.
Yep, fantastic. Very insightful. Thank you, Shahrukh. You touched on a couple of concepts, approved assets and investment strategies. Just for our audience benefit, because they might not be familiar with this kind of terminology, would you be able to elaborate on that a bit further?
Sure. So what I'll do is I'll go on to the next slide to help me show that visually. So what you can see here, the investment universe, we are not aligned to any fund manager. So, the investment universe is open to us. We can choose whatever makes sense to us, whatever we think has got the best merit for our clients. So we choose through thorough due diligence the assets that are to be included into the approved list. And these assets would typically fall into different classes. So there would be a defensive side, which would include cash or cash enhanced, cash equivalents. And then, you've got fixed interest. And then on the growth side, you've got shares, which may be, Australia, New Zealand, as well as international. And that too would be diversified across geographically, the US, Europe, emerging markets, and thereabouts. Now, from those, we would be allocating assets into groups, which will form strategies. And depending on the risk profile of the strategy, allocation will be tweaked accordingly. Now, on the bottom left, you can see conservative, which is, obviously defensive. It will have about, 85% allocation to cash and fixed interest. And then on the other end of the spectrum, bottom right, you can see very aggressive, which is practically all out growth. It'll have about 97% allocation to share type of assets. So it really depends on what the client is after, what their goals and objectives are. The advisor can help them, choose the right one.
Fantastic. This really gives me a lot of confidence over the investment solution we recommend for clients. Now, we've talked a lot about process, investment committee. To bring it to life for our audience, Shahrukh, could you share with us an example of a recent change being made as a result of investment committee meeting?
Sure. So one of the changes that comes to mind that we made a few months ago was in international equities. A global shares manager, a high-performing manager over the years, we decided to replace it with another one. And the reason was that the fund manager, because of its success, had attracted a lot of funds from investors, and the fund had become really, really big, which sounds great. The problem was the fund invested in only a handful of stocks, which meant that the underlying positions were really large, and it would be really tough for the fund manager to offload any of those positions if there was a negative event with any of those companies. So effectively, we thought that this fund had turned into a dinosaur in a very fast-changing financial landscape. Now, what we did was we found another fund manager with a very good investment process, but a lot more diversification. So, it was very nimble on its feet, and, it could, chop and change if circumstances warranted. So we made the change, and as a result, we were able to add a lot of value because the ex-manager actually had a negative outcome for two of its large holdings. and wasn't able to offload those holdings quickly enough. The share prices of those companies really sharply fell, and the fund manager performance was negatively impacted. So we were actually able to add quite a bit of value. And on that, what I've also done is I've added this last slide, which shows the performance of the strategies that I was telling you about a bit earlier. You can see, at the leftmost column, the type of strategy, the different risk profiles going from conservative all the way down to very aggressive. And I've added the term deposits at the bottom just for comparison purposes. You've got the split between income and growth. Now, the performance figures, I would encourage the audience to focus on the rightmost column, or at least the 3-year and 5-year columns, because that's the long-term view, and that's a better indication of what the strategy has achieved over time. I mean, the 1-year performances figures, you can see they are pretty good. For example, the growth one is nearly 20%, but that is not really sustainable because that includes quite a bit of the recovery from COVID. But the longer term performance you can see are really strong as well. So I think we have done really well as an investment committee for our clients, and we've been able to achieve quite a good outcome.
That's fantastic. This is a perfect note to conclude this video. Thank you, Shahrukh, for being here again. Thanks everyone for tuning in, and see you next time. Bye.
Fantastic. See ya. Bye.